Hi, this is Ken Lake with MAC's Technical Market and Analysis for Friday, June 16th. I'm going to concentrate tonight solely on July wheat. Wheat's been making a nice move here in the last couple of weeks based on the dry weather we have in the Dakotas. The fact that going into this winter we had the lowest seedings in 100 years in this country. The Kansas wheat crop is in some question because of the winter storm we had earlier this spring. The late winter storm, that is, and so now we have a few good days higher. So coming in here this morning, the first thing we noticed, of course, was that stochastics really just this week moved from mid-range to an overbought condition. So anytime we get into these overbought conditions, we're starting to see the market spike in a pattern like this, and we start paying attention to see if we can find a sell signal. And to try to find that sell signal, we basically go to an intraday chart and begin at about a 4-hour increment. And in a 4-hour increment this morning, we were still looking at these patterns in here and really hadn't gotten a sell signal yet. And this was a sub 460 kind of value at that point. To look even further, we'll pare this down to a 1-hour chart. And then you can see on a 1-hour chart, we did start getting, well, we really saw no weakness in a 1-hour chart in intraday, and you really had to go down to a quicker chart, 5 minutes or even a minute chart. And then once you started seeing that, once we got up into this 460 area, we started getting our sell signals with these red bars coming in here. And so at this time in the morning, really right at the opening, or just a little shortly after the opening, we came out with a recommendation that to sell 460 July wheat futures. So there was a few sales on there, and then we subsequently, of course, went to 460, 465, 466, peaked out this morning at about 468.5 is where the high of the day was. Now you do see in the last few minutes of the trade today that we did see the sell-off, only a penny bushel, down to 465. And we can call that support until Monday, until we see how the weekend weather turned out and those sort of things. But notice how stochastics collapsed intraday on a 1-minute chart from 100 down to less than 10, actually 6.6 here at the end of the day. So a sell signal at the end of the day, albeit fairly weak. We really won't be too bearish red wheat here until we see the daily stochastics start to turn, and I want to see the black line here under the red line to see that daily turn as we saw here. But nevertheless, because of the fundamentals in wheat, we'll say that the lows are in for wheat, and that as we get into harvest period, again, the tendency in a short crop year like this year would tend to set highs at harvest time rather than some other seasonal pattern that we usually run into. So for those in the Eastern Corn Belt, Ohio, Michigan, Indiana, we're still going with the recommendation that we sell off the combine. But when we get these kind of days, these overbought days, it's a signal that we should take some coverage. And we made that recommendation today, and we will continue to sell strength until we're out of the 2017 wheat market altogether.